Welcome to The Explainer. Today, we're going to look under the hood of the global financial system. Now, I know that sounds complicated, but think of it like a giant engine that powers pretty much everything. And right now, that engine is being transformed in ways most of us never even see. It all really starts with a feeling I bet you've had. In a world where you can do almost anything instantly, why is it that sending money to another country can still feel like it's stuck in the 1980s? It can take days, it bounces between a bunch of different banks, and the fees, well, they can be surprisingly high. Well, a potential fix for that old clunky system is starting to emerge. You can think of it like a brand new superhighway for money, one that promises to bypass all the old congested roads we've been stuck on for decades. They're called stablecoins, and the idea is actually pretty simple. They're designed to be a digital version of a currency you already know and trust, like the US dollar. So unlike other cryptocurrencies that bounce all over the place, a dollar stablecoin is built to always be worth $1. But it can move at the speed of the internet. And believe me, this isn't some niche little experiment. It is absolutely exploding. The market has ballooned to $300 billion. That's a 75% jump in just 1 year. That is a massive, massive signal that people are really using this stuff. So here's the bottom line, the real difference they make. The old way, right? It involves a whole chain of banks, and every single one takes a little piece and adds a little delay. But with stablecoins, you can send value directly from your digital wallet to someone else's. It's almost instant, and it costs a tiny fraction of what it used to. And that brings us to our first analogy. If the financial system is this engine we all depend on, then stablecoins are like a powerful new turbocharger, making everything way faster and more efficient. It's a huge performance upgrade. But as we're about to see, you can't just bolt a turbo onto an old engine without checking all the other parts first. Okay, so if stablecoins are the turbocharger, what's the fuel, right? What actually powers this new tech and gives these digital tokens the stability that makes them trustworthy in the first place? Well, to keep their value locked to $1, these digital dollars are backed by real-world assets. For every digital dollar out there, there's supposed to be a real dollar's worth of something safe sitting in a reserve. And what's the safest, most important asset they use for that? U.S. Treasury bills. In other words, U.S. government debt. Now, what's so fascinating here is that even though these stablecoins are built on the U.S. dollar, their biggest impact is actually felt all around the world. As the CEO of Visa points out, their real home, their product market fit, is outside the U.S. For people in countries with crazy inflation or shaky banks, this is a lifeline. It gives them digital access to the dollar's stability. And this brings us right to the core of the engine. See, stablecoins are creating this huge new global demand for U.S. debt to use as their fuel. But at the exact same time, the supply of that debt is growing at a historic, frankly alarming pace. And that's setting off some serious warning lights on the dashboard. I mean, just look at these numbers. They're staggering. The Congressional Budget Office projects that U.S. federal debt is going to grow from almost 100% of the country's entire economic output today to over 150% by 2055. This isn't just a small uptick. We are heading into totally uncharted financial territory. And this is the heart of the problem. The CBO makes it clear this isn't just a number on a spreadsheet. It comes with real, serious risks. It could slow down the entire economy, make us vulnerable to financial shocks, and could even risk a crisis of confidence in the U.S. dollar itself. You know, the very asset this whole new system is being built on. But here's the thing, and this is a massive knowledge gap. The CBO, the agency that makes these projections, they admit it themselves. They say there is no known tipping point. Nobody actually knows how much debt is too much before a crisis hits. It's a huge, open question just hanging over the entire global economy. So let's recap. We've got this new turbocharger being bolted onto an engine that has a warning light flashing on the dashboard. But there's another layer to this whole story, a huge, complex part of the financial machine that operates mostly in the shadows, far away from the regular banks we all know. Yeah, this is the world of non-bank financial intermediaries, or NBFIs. People sometimes call it shadow finance. Think giant investment funds, private credit firms, hedge funds. They all act a lot like banks, but they do it in the shadows, without the same level of oversight and regulation. And the scale of this is, well, it's almost hard to comprehend. The Financial Stability Board says NBFIs control over $256 trillion in assets. That's not just a big number. That is more than half of the entire global financial system. The part of the system in the shadows is now bigger than the traditional banking system we can all see. So this brings us to our second analogy for thinking about all this risk. A game of financial Jenga. The entire tower is built on a foundation of US debt. And these NBFIs, they're constantly adding new, complicated blocks to the top and pulling out old ones from the middle, all without a clear blueprint. It's making the whole structure, potentially, a lot less stable. And here is another huge knowledge gap. The Financial Stability Board, which is the global watchdog for this stuff, they openly admit they have significant data gaps. They can't fully see all the players, especially in new areas like private credit, and they don't understand how they're all connected. Basically, the regulators are flying partially blind. Okay, let's connect all three pieces now. We have the fast new money of stablecoins, America's old and growing debt problem, and this massive, shadowy world of finance. This is where the whole story really comes together. It's basically a giant feedback loop. Stablecoins drive up demand for US debt, which, okay, helps finance the deficit. But the sheer size of that debt creates a huge systemic risk. And then you have the NBFIs, who are the major buyers and sellers of this debt, and they can amplify any little shock and turn it into a major crisis. So why does any of this matter to you? Because these aren't just abstract ideas. This is a fundamental rewiring of the plumbing of the global financial system, how money, debt, and risk move around the world. And that affects everything, from your savings to the stability of the entire economy. Which leaves us with the really critical question for the future, the one that policymakers are wrestling with right now. When you have this many moving parts, so much growth happening in the shadows, and all these gaps in the data, how do you even begin to manage the risks without killing off all the innovation? And that's really the central tension of this whole story. We've got this incredible innovation happening, but it's being built on a foundation that is under historic stress, and it's all connected by a hidden system that has grown beyond anyone's full understanding. The turbocharger is spinning faster than ever, but you can definitely hear the engine starting to rattle. Thanks for joining us.